Shopify released their latest quarterly figures before the market opens, a pretty good quarter, but right now before the market opens, the stock is down around 6 to 7% or so. Why is that? Well, you can have good quarters, but if you do miss on specific metrics, even small misses here and there with regards to guidance, and you're trading at a high multiple, you're priced to perfection, then your stock is going to get hit. Now, for long-term investors, this is probably the best case scenario because you see, the business is doing quite well. Okay, the stock is overextended. This gives me an opportunity to actually increase my position. Plus, if you look at what Shopify stock has done in the last 6 months, was up over 70%. So being down a little bit won't really change that much. Right now, Shopify will have a market cap closer to $145 billion. And yes, the forward PE is quite high, at around 80 times. The company is also expected to grow the bottom line above 20% for the next coming fiscal years, and the same for revenue. Still expensive, but you're buying a tremendous business that is growing and becoming more and more profitable. So enough of me talking. Let's review this earnings report. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. As always, we'll start off with some comments here from Harley Finkelstein, the president of Shopify, and then Jeff Hoffmeister, the CFO of Shopify. So they said the following: 2024 was a standout year for Shopify. We seized every opportunity to fuel our growth, and it shows in the result quarter after quarter. Heading into 2025, we are committed to making entrepreneurship more common and further establishing Shopify as the go-to commerce platform for businesses of all sizes. With our proven track record, the agility of our platform, and our relentless focus on merchant success, we like our odds in this evolving technology landscape and are excited about the opportunities it brings for Shopify and its merchants. As for the CFO, we are thrilled with our strong performance in Q4, wrapping up an outstanding 2024. Q4 marks our 7th consecutive quarter of 25% or greater revenue growth when excluding logistics. Remember, they did acquire logistics business. They figured out that it doesn't make sense for them, so they sold it. So we have a weird year over year, where we had weird year over year impacts because of that. Moreover, we grew free cash flow margin sequentially each quarter of 2024, reaching 22% in Q4. GMV growth accelerated each quarter this year, achieving a 24% year-over-year increase in 2024, marking our highest GMV growth in 3 years. Which brings us to the numbers for the quarter. So GMV increased 25.7%, monthly recurring revenue increased 23.6%, and revenue grew 31.1% year over year. Gross profit increased 27.3%, operating income 60.9%, and then free cash flow growing faster than revenue here. Free cash flow grew 37% year over year. And free cash flow margin is now at 22% compared to 21% same quarter last year. Then for the full year, we can see an increase from 13% free cash flow margin to 18% at the end of 2024. For Shopify, I've said it in the past, the whole story here is that increase in free cash flow, that increase in free cash flow margin. Then looking at GMV, this is an added bar because it's still not updated yet, but you can see that every December that bar just becomes bigger and bigger. Of course, Q4, the best quarters for companies like Shopify and Amazon and all of those. So yeah, we are getting quite close to that $100 billion mark. Now, when we look at revenue, we of course have to look at the two segments beneath it. So you have subscription solutions and merchant solutions. So subscription solutions increased 26.8% year over year. Merchant solutions increased 32.5%. Now, how much does it cost them to grow that fast? Well, here is a small issue. The cost of revenue to grow subscription solutions by 26.8%. Well, in this quarter, they grew cost of revenue for subscription solutions by 38.1%. Merchant solutions grew by 34.6%. So overall, revenue increased 31%, but cost of revenue increased 34.9%. So, okay, keep that in mind. But all in all, if we zoom out a little bit, gross profit did still increase 27.3% year over year. Looking at, the growth rates for both of those segments, as you can see, amazing growth in the last couple of years. Switching to the expenses, sales and marketing only increased 9.7%, R&D 12.8%, G&A 12%, transaction and loan losses did increase 68.9%, but it is still a small part here of the expenses. So all in all, total operating expenses increased 14.7%. So as we've seen before, revenue increasing quite quickly, gross profit still quicker than operating expenses. And so we're getting here net income an increase of close to 100% at 96.8% year over year. And of course, for the full year 23 compared to 24, the increase here is immense because, well, we did have that impact of the logistics business before, and the business was not as profitable as it is today. So that's why we're seeing this. And I do expect that to continue. And that's also one of the main reasons why the stock has performed quite well since the lows at the end of 22, beginning 2023. They did give us a couple of extra metrics here to work with. So they've seen 33% international revenue growth, 33% offline revenue growth, over 140% B2B GMV growth, 50% ShopPay GMV growth, and 32% GPV growth, as we've seen before. Then they told us that unique online shoppers purchasing from Shopify merchants in 2024 reach over 875 million. There are over 200 million ShopPay users. And then with regards to US e-commerce market share, they said that they're above 12%. And all of that is, of course, thanks to their rapid growth and rapid improving profitability. If you look at this right here, annual revenue growth that persists with scale, 2024 was 26%, 23 was 26%, 22 was 21%. They have generated 12x more operating income than in 2020. They are generating $1.6 billion in free cash flow and growing. There was also a 500 basis points free cash flow margin expansion, as we've seen, 13 to 18%. Then looking at Outlook, and this is where they basically slightly miss and why the stock is down a little bit. We expect the strong merchant momentum from Q4 to carry over into Q1, recognizing that Q1 is consistently our lowest GMV quarter seasonally. With that backdrop, for the first quarter, we expect revenue to grow at mid-20s% range year over year, gross profit dollar to grow at low 20s% range year over year basis, stock-based compensation to be $120 million, and free cash flow margin to be in the mid-teens. And again, these are slight misses. These numbers are still quite good. And I would assume that they're also facing some headwinds with regards to, well, currency FX. We've seen that with Amazon. We've seen that with other companies as well. So that's probably also playing a small part here. And so right now, if we look at the stock, it does seem like it will open around the 20-day moving average. The 50-day one sits at 108.9 and the 200-day one closer to $90. RSI is slightly overbought, was slightly overbought going into this earnings report. So yes, maybe the anticipation were just sky high and small misses, especially with what we've seen in the last couple of weeks. Well, you're going to go down, but it does not seem like it's going to go down that much. Again, for long-term investors, this is still a dream. If you can buy it closer to $100, maybe even beneath it, I think that would be a great deal for the future. I just don't know if that's going to happen unless we get more of those DeepSeek tariffs Mondays where everything goes down, then maybe that might happen. But all in all, again, Shopify, tremendous company, tremendous leadership, great product and business. Yeah, the stock is expensive, but if you can accumulate more shares of a great business, who will complain, right? So all in all, that's about it. Another good quarter by Shopify. The stock market will do what the stock market will do. Just don't let them scare you out of your positions for silly reasons. That's all I've got for you right now. There is maybe going to be a live stream later today, depending on my co-host. And we're also going to have the reviews for Supermicro and Lyft after the market closes. So stay tuned for that. Hit all the buttons, we really appreciate it. And I'll see you all in the next one. Bye-bye.